area where we have to enter in on a long-term strategic goal-wise. And this business actually, if you look at a standalone per se, they are catering to branded generics. A lot of European countries have branded generics concept where margins are pretty good. And from margin perspective, if you look at the margin profile is improving last few years. Historically, it's been a more ampule-driven, low-margin business. Last few years, I've invested into additional assets and additional capabilities like lyo, needleless injectors, pre-filled syringes, ophthalmic sterile gels, and also some suspensions. And a lot of projects are actually happening at this end from the CDMO perspective. So this will be a bit accretive in the coming days. And that's why you can also see the trend of margin improvement in last 2 years. So we are confident that in a standalone basis, because of the new capabilities that have added over the last 18 months, the margin will improve. And in addition to Gland and Cenexi coming together, there are more opportunities will help improve these margins as well. And also, if you see from the CDMO perspective today, our revenue percentage in CDMO side is a little less compared to our B2B generic injectable space. Now, this will add to that CDMO portion of the business, which is kind of more stable.
Okay, very good morning, Mr. Sadhu. This is Shrishti joining in. But with this acquisition, when can we expect the synergies to reflect in the earnings?
I would say, some should kick in, next year and some in 18 months. Especially from the customer base perspective, we have our own customers who have presence in Europe who are currently taking products from other manufacturers. So that can start, get initiated. We are expecting this deal to get closed in March timeframe. That's when we can actively participate. But standalone basis, there will be an improvement of margin with the more products coming out of the sites where they have newer capabilities added on in last 2 years.
Right, Mr. Sadhu, if you could talk to us about how much do you plan to invest more in CapEx, and also if you could help us with some sort of a timeline on that particular front?
I think once we close the deal, I think we should sit across the table and decide what investments is really required. There is a base plan with which we have considered while we evaluated this asset and gave a valuation. If you look at lyophilization, they still need some capacity to be added on in next couple of years. They've already invested into new ampoule lines, which are more automated. It's already invested into by the previous owners. But the next 4 years capex plan, I think we'll evaluate once the deal gets closed.
Okay, but Mr. Sadhu, a report suggests that your parent Fosun Pharma is actually looking to sell stake, and we know that the company has clarified on that, but just want to understand from you if there's anything more that you wish to add, and also, are you in talk with any of the investors, or if anyone has approached you in the recent past?
So we don't have any, we have already informed, we don't have any official communication or information from our parent promoter about this. We are hearing, like you've been hearing in the news. People have been talking about making general calls. Is it true? But nobody knows actually how much, what's the truth and what's the rumor about. But we don't have any communication from our parent company.
Right. So just to get this right and not, get this particular statement wrong. So you're trying to say that no investor has actually approached you recently on this?
Not really, because it's in the private market, private issue. So from our promoter, for us, there's no communication on this.
Okay, Mr. Sadhu, let me take up the next question on the US market. How exactly is the US market flaring up? Because in the past, we have seen some cost pressures hitting your numbers. So any ease out there on this front, and what's the outlook in the margins for the next 2 years you are looking forward to?
Yeah, I think, we're already seeing a lot of changes happening in the US market. There was irrational pricing that happened, I would say, in last 12 to 18 months. It's a combination of COVID inventories lying there and also a lot of players entering that space. But in a recent past, you have seen companies are looking at rationalizing their portfolio. They're selling ANDAs. Some companies are actually getting sold. You're already seeing some shortages happening at the US market. So for which I anticipated earlier, so it could be a temporary phenomena where there were price pressures, which is not sustainable in the longer run. And we are sticking to our guns on launching products in the portfolio, establishing a portfolio, filing ANDAs in the same place like what we've been doing, and hopefully next few quarters, there should be reasonable margins to come back here.
Right, let's shift focus. Let's talk about expansion plans for Gland Pharma. Do you plan to further on expand in the China market? And also, if you could share some update on that particular front with us.
So we have already filed 8 products in China. One we are expecting approval this quarter. Next, one more product early next year. That's the expectation on the approval side. We are creating another portfolio to be filed in China market next year as well.
Okay, we look forward to that. But Mr. Sadhu, can you please update us on the situation on the syringe shortages? Have they normalized a bit, and how will that reflect in your earnings going forward?
Yeah, from pre-filled syringes, that's kind of stabilized. We don't have any more shortages, so we're catering to the market demand. But there are some stopper issues for some of the products, but not in a big way. But being a large injectable player, we do see some shortage happening in 1 or 2 products, but it's not in a major way.
Right, Mr. Sadhu, I know that you've not shared guidance for your future earnings, but you've definitely have mentioned that situation in multiple parameters are improving. If you could actually shed some light on how do you expect this one to transpire or translate into numbers going ahead? Where do you see growth lying ahead for your company?
So we have not guided, we are holding off the guidance for a few quarters, like I said last time. We are still evaluating the market. We want the market to settle down to get a clear view on, who are the places to stay back, which are the products which are settling down. We'll stick to that. I think, the current situation is we're trying to consolidate the business, focusing on areas where we need to improve upon, both from supply chain perspective, from inventory perspective, and also from inorganic side. If this is one of the acquisition, we're also looking at other areas where we can acquire to grow quickly.
Right. All right. Thank you so much, Mr. Sadhu, for joining us on the show to talk about the acquisition that you've done, where you see the numbers lying ahead for Gland Pharma, also clarifying on that news reports on the founder's stake sale in the company. And that was the management of Gland Pharma. It was Mr. Srinivas Sadhu, who is the MD and CEO of the company, talking about various aspects for Gland Pharma. Remember, yesterday the stock saw a very sharp spike in trade. No doubt today it is subdued. You're seeing a 4% downtick on that particular company. But let's shift focus from pharma to the FMCG pack. And remember, the FMCG counters have been on fire. Yesterday, you saw almost all the counters see really good uptick in trade, be it Nestle, be it Britannia, be it Dabur, be it HUL for the matter of fact, all of them seeing stellar up move in yesterday's trading session. And today also, you've seen the FMCG index on intraday basis hit a record high level. So let's put the spotlight or lens on the FMCG sector and see where the growth or the future lies ahead for this particular space. And let me bring on board our guests for today. We have Shahina Mukaddam as well as Kunal Bothra joining us very shortly on the show. A very good morning to you, Shahina, firstly. And FMCG pack, what a furious rally actually was at play in yesterday's trading session. Today, on an intraday basis, you saw FMCG index hit that record high levels. What is exactly working for this sector, and do you think that it has become a little reasonable for investors to look at it afresh?
Well, after a long period of negative sentiment that was impacting the overall investment into FMCG stocks, I think finally the realization has come that COVID is at least as far as India is concerned behind us to a large extent, and consumers are coming back in a big way. So we've seen demand pick up. In the last quarter, we saw the demand in the urban sector picking up. Rural is still to pick up, but it is catching up, and it is expected that the demand will improve still further in the Q3, in the second half of this year, going forward. Also, if you see last quarter, like the September quarter, the impact on the gross margin because of high inflation and high raw material prices, that also to an extent is easing out as of now. So this is likely to support an improvement in gross margins, which was impacted, if we saw, across the board in the last quarter. So this is the realization that investors are coming to light with, is that the coming second half is likely to be much better than the first half for I think all FMCG companies. And despite this pressure on margins, keeping their advertising cost in control, keeping the promotion cost in control, most of the companies, at least the large 5-7 companies which account for a chunk of the FMCG index, they actually were able to maintain their EBITDA by keeping a check on their advertising and promotion costs. So I think things are looking much better for the second half, and we've seen investment come back into the sector.
Okay, so things are looking much better for the second half. That's the fundamental take coming in on the FMCG pack. But Kunal, coming to you, because yesterday we have seen amazing move coming in, counters like HUL, Dabur, even Britannia hitting its all-time high levels. Going forward, what sort of a target should one be looking out for, and how much belief you have in this particular rally once again that we are seeing happening in these FMCG names?
So, good morning first of all, and my belief is that most of these FMCG stocks are looking very attractive from here on, and I would place them into three key orders. One is Britannia, which has been one of the best performing stocks, not just in the last 2 days, but then over the last couple of months. It's been one of the first stock which I think has also managed to break past above the life highs and crossing above those levels, sustaining above those levels. Then Dabur, I think, is also on the verge of a breakout above the 600 mark. It had done pretty well for itself and has recovered quite smartly. HUL is the other stock which I think has also managed to do pretty well for itself, looked very attractive on the charts. And if you look at the June lows, from the June lows, it was actually the FMCG index which was one of the first sectors which led into that breakout. So every market trend which we've seen, whether it's 2020 lows, whether it's the June 2022 lows, it's been led by these FMCG stocks which have rallied up first, and then the markets have actually gone into a risk on mode and the other sectors have participated. So if we anticipate this time around as well, I would believe that the FMCG rally should sustain and should build from here on as well.
Okay, so a lot of confidence coming in on these FMCG names. But viewers, with this, it's time to slip into a short break, but don't go anywhere. Coming back, we'll be taking up your stock queries, so stay tuned.
The company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market,
Welcome back. You're watching Buy Now, Sell Now on ET Now, and it's time for us to take a viewer queries. But before that, Sharmila, I beg your pardon, Shahina, very sorry for that. We've seen the markets actually scale new highs, and in this sort of a scenario where you have markets scaling new highs every single day, how should retail investors continue to protect their wealth?
I suggest that one can go on, adding stocks in a staggered fashion. Investments done like this always give you a return in the longer term, irrespective if the markets were to correct by 10% or go up by another 10%. So I think that would be the way forward. There would be some sectors which have underperformed in the last couple of quarters, which actually you can look to add if you don't already have them in your portfolio. Something like an FMCG, as we just discussed. There are stocks over there that you can add that look good even from here. You have some of the opening up stories like Patel Industry. There also you have some good picks that are there. IT, which has not really performed in the last couple of quarters. I think one can look to add IT also. That sector has really been underinvested in. So one can be stock specific, have a staggered approach, and continue to invest for the long term.
All right, so that's what retail investors should keep in mind. But let's move on and let's bring on board our queries. Remember, this is the show where we answer all your stock-related queries. So you can write into us. We are live on YouTube, Twitter, as well as on Facebook. You can write to us on the number flashing on the top of your screen. That's our WhatsApp number. Do remember to mention your name, the stock that you're looking to actually invest in. If you've already invested, then mention the quantity. And the buy price, also mention your horizon. But when you're writing to us on WhatsApp, please do remember to write your names, otherwise it gets very difficult for us to actually credit those queries to you. But with that, let me kickstart with the query segment, and the first one that I'm getting is from Sri Kutan, and he wants to have a technical view on SKF India. Kunal, he wants to know whether it's a good buy at current levels or should he wait for some more correction?
I think you can wait for some more correction. It's not yet reached the 50-day moving average, which is still at, I think, 4,670 for SKF India. And a more for stronger support would be closer to 4,340, which was the previous low the stock had hit in the month of October from where the rally started off for SKF India. So these are the two levels which you should probably keep an eye on, depending on your time frame. If you are in from a medium-term kind of a time frame, then I think 4350 could be a good zone where you can look to buy. But if you're in from a very short-term time frame and you're looking for a bounce, then probably closer to 4600 is where you can look to buy.
Okay, moving on, the next query from Velavan, and Shahina, he's holding 150 shares of Sequence Scientific at an average price of 142, and that's almost 50% erosion to his investments right now. What's the take coming in on here? And he's looking to average out. Are these good levels and a good idea to average out?
Just he holds. The stock is very expensively valued. Nothing wrong with the fundamentals per se. So I would continue to wait to average if I'm holding, or one can even switch from here if you're a short-term investor. If I want to average, I will look at somewhere close to about between 80 to 85, not at current levels.
All right, this next one is coming in from Soumitra, and he wants a view on CAMS. He's saying that it was one of the favorite recommendations at higher levels, and HDFC was looked down upon. He's invested in both HDFC MC as well as in CAMS, but CAMS has only been sliding. So he wants to know whether are there any red flags fundamentally for CAMS, because with the SIPs at all-time high, CAMS should have flourished, but that's not been the case. So he wants your advice on this, Shahina. He wants to know what's actually not working well for CAMS.
I think there's a lot of change happening in technology and government policies. I myself have a negative view on CAMS, and I would suggest he switches from CAMS. I think if he wants to participate in the, the growth that is happening in the overall investment in equities scenario in India, I think there are better stocks to invest in. You can look at something like even a BSE, Bombay Stock Exchange, which actually has given you a good correction and looks decent at current levels. Or you can go for a direct investment in a brokerage, something like a Angel one, but I think one should switch from CAMS.
Okay. But moving on, the next query from Denny, and Kunal, Denny is holding 50,000 shares of Tata Steel at a price of 101, and in the past couple of days we have seen that the steel counters are now moving up on the back of news that the COVID cases are at a week's low, and not just that, even the government is looking to make some kind of relief measures out there. What's the take coming in the short-term perspective?
I would suggest to hold on. In fact, in terms of the technical pattern, assuming if the stock breaks past about the 110 mark, say in the next 1 or 2 weeks, then it could complete an inverted head and shoulder pattern, and this could be a pattern which is almost a 13 to 15 rupee pattern for Tata Steel. So I would suggest to hold on. The setup is attractive. Many of the metal stocks have done pretty well, as well as made a good comeback for themselves, whether it's larger cap names like JSW Steel or even the other ones like SAIL or Hindalco, which have done reasonably well for themselves. So I think on this backdrop, we can expect that Tata Steel will also move up higher. 110 plus is the breakout point which you need to watch out for.
All right, the next one that I have is coming in from Joy Sheila and wants to know about Zomato for the short term. Makes sense to buy at current market price, Kunal, and what sort of target should he keep in mind for Zomato if he's looking to invest, if you advise him to invest in it?
So I would suggest to wait out for maybe some more time. I think, Zomato had a very good rally, but somehow the stock has not crossed as well as sustained about the 200-day moving average. Now, assuming if the stock falls below and say comes back to say 55, 56 mark, that could be a point where you may look to invest. That could be at least a zone where the stock may get into an average support. Or on the upside, if the stock sustains above the 200 DMA, which could be around 69.70 mark, which was the previous high for Zomato, that could be a point where you can look to buy. So would recommend a wait and watch as of now, because the stock is just below the 200 moving average and it can go either way. So it's better that you buy either on the breakout where momentum comes back, or at a support where the risk reward is in your favor.
All right, that's the view coming in on Zomato. But on that note, let's slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue with the journey of taking all your stock-related queries. So viewers, stay tuned. Also, experts, hang in there.
Well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. ITC's credo is nation first,
सब साथ बढ़े. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed.
करते हैं गोल्ड लोन मेला. गोल्ड लोन लेने पर पाए सुनहरा मौका कपल्स के लिए फॉरेन ट्रिप जीतने का और साथ ही जीते कई आकर्षक इनाम. यही नहीं, हर ट्रांजैक्शन पर होगा 24 कैरेट गोल्ड आपके नाम. अपने फ्रेंड्स और फैमिली को रेफर करने पर भी मिलेगा खरा सोना. गोल्ड लोन लेने के लिए आज ही मुथूट फाइनेंस की ब्रांच में आए या फिर घर बैठे बैठे गोल्ड लोन पाए. आज ही कॉल करें 1800-313-1212.
Welcome back to Buy Now, Sell Now, and let's keep it going with stock viewers query. And the next question coming in from Anu, and Kunal, Anu wants to know the take on Tega Industries. It's almost 1 year for this stock to be listed on stock exchanges, but the stock is actually down 7%. Anu entered in this counter at a price of 586. What's the view coming in?
I would recommend to hold on. I think the stock has just started to get into a trending mode for itself. The recent rally from the month of June from 480, 490 levels, I think has done, the stock has done pretty okay for itself. Now at 570 plus, it's completing a bullish flag pattern now. We have to patiently wait out for a breakout. That breakout point for Tega would be around 600 mark for itself. So whenever the stock breaks past about the 600 levels, we could expect that this 110, 120 point flag pattern rally, that could be a rally which we can expect on the upside for the stock. So potential target, you can keep it at 710, 720 for the stock.
Right, this one is coming from Manish Raju. He's holding BLS International, 650 shares at a price of around 236 rupees per share. Rama Steel's 400 shares at a price of 134 rupees per share. So the thing is that both of these counters, or both of these companies have announced bonus share issue. So now he wants to know whether he should look to add some more of these stocks in his portfolio, hold or book partial profits. What's your take on this one, Kunal?
Well, I would recommend to book partial profits, or at least, if possible, try and look to book out full profits over here. I think many of these stocks, they've come back to their extreme high levels. The RSIs for BLS International, for example, is at an extreme zone on the upside. It's the monthly RSI, for example, is 89.5 to 90 for BLS International, and similar is the case with Rama Steel as well. So I think it makes a lot of sense to book out profits over here. Now, whether you book out partial profits and then trail your stop losses marginally, that's a call which I think you can take, but I think it's a good zone where you should look to start taking out profits rather than looking to accumulate or hold.
Okay, the next question coming your way, Shahina, is from Chandrasekharan, and he's holding Tata Chemicals at 120 shares at an average cost of 1200, sitting at a loss of around 180 rupees per share. And going forward, he can hold it for the next 1 year. Will that be a good idea to exit Tata Chemicals and buy AMI Organics? Is his question.
Suggest that he continues to hold Tata Chemicals. While yes, short term he may face a little bit of correction, but I think the longer term is strong. The company is putting in place very strong growth plans, and they are building on their existing portfolio. So I would continue to hold Tata Chemicals for the long term.
K.R. Balan has a query on alkylamines and Gland Pharma. He has both of these counters, not mentioned the buy price, but definitely mentioned the quantum of loss he's making on both of these stocks, 15 to 20% loss on alkylamines and Gland Pharma holdings. Now he wants to know whether he should look to switch out from these counters to some other stocks altogether over the period of next 12 to 15 months, or stay put with these holdings.
Well, I think you can stay put as of now. It's not that the charts have deteriorated significantly. I think for Gland Pharma, we've seen a very good recovery for the stock yesterday, even though the stock had gotten a bit of an exaggerated up move, and that's why you're seeing a bit of a scale back today. But then I think the chart patterns are evolving quite well for Gland Pharma. Seems to be that the 1700 mark approximately is a major support which the stock has bounced off from. So there could be a possibility of a decent cover up of this underperformance with a time frame of 3 months plus for Gland Pharma, and same would be the case with alkylamines. The stock has been more sideways. It's trading below the 200 moving average, but the averages have flattened out for alkylamines. So whenever the next trend begins for the stock price after this consolidation, it could probably try and get back at least the 200 DMA, which could be a 10% higher from current levels. So in both of the cases, Gland Pharma as well as alkylamines, it makes a lot of sense to hold on.
Okay, Kunal, the next query coming from Sudha, and Sudha wants to enter in a railway stock better for the longer term perspective, and she has three options, that is Concor, IRFC and IRCON. Concor has been an underperformer, down 4% in the past 1 month, but IRFC and IRCON up over 30% in the past 1 month. Will Concor be a good bet?
So I believe IRFC and IRCON could be better bets, but then the strategy, as I think I've been pointing out time and again over the channel as well, that the strategy over here matters quite a lot. So, when you're looking at a 100% kind of an appreciation in a short span of time, you have to wait out for a phase of correction. Now, the correction could be a 10% or a 15% correction on average. That could be a starting point for you to look to start buying these names. So maybe a 15% correction on average for IRFC and IRCON from their previous major highs could be a starting point, and then every subsequent 10% correction is where you can look to average.
All right, this next one is coming in from Nino and Coromandel International. He wants to know what's the outlook for the longer term for this one. Shahina, what's your take on Coromandel International?
I would continue to hold this, have a positive on Coromandel, a very strong balance sheet, and I think fertilizer stocks are starting to look better given the fact that raw material prices are correcting.
Okay, that's the take coming in. But the next question from RK and Kunal, he wants to invest in one counter for 6 months time frame, and he has three options in mind. One is Union Bank, Borosil Renewables, and the third one is Delta Corp. Which one will be a better bet for him?
I'll probably prefer a fourth option. You can look at BHEL as a better play. I think the stock in the last 1 week has shown the kind of quality the stock can exhibit over the near to medium term. So out of the lot, the three names which you mentioned, I would prefer Union Bank, but then the stock has run up also exceedingly high. So the risk reward may not be in favor. You're looking at maybe a 15 rupee kind of a gain, 15 to 20 rupees on the upside, but the risk to the downside is as well closer to 10 to 15 rupees for Union Bank. BHL on the other hand, I think could be an attractive play from current levels.
All right, this one is coming from Sagar. Kunal, for you, technical view on Sundaram Clayton, as it's not a very liquid stock. He's bought about 3,000 shares around 1900 levels. Do you see that the stock has potential to reach its lifetime high and also surpass it?
So, it's done pretty well. Again, it's an illiquid stock. In fact, today, for example, the stock has just shown some 700 or 750 shares of trading so far. It's done pretty well for itself, trading above the long-term averages, the 200 DMAs, etc., etc. So all of that is positive for Sundaram Clayton. But then, it's very difficult to anticipate that how strong the trends could emerge and consistently behave for these names as compared to the trends for the small cap and the mid cap index. Right now, we are into a zone where the small caps and mid caps have underperformed. So if the underperformance aggravates, then you may expect these stocks to correct. But if the underperformance picks up, then you may expect Sundaram Clayton to move up higher. So I think if you have invested at lower levels, then you can stay put as of now.
Okay, the next query coming in from Sanjana, and Kunal, Sanjana has been tracking Berger Paints on technical fronts, and she is suggesting that is the stock suggesting some short-term up move out there? Would you be able to help her there?
So, I've tracked Berger Paints, Asian Paints, since last many months, and the only concern with Berger Paints and the charts for Berger Paints is this inability of the stock, even at a time when the base commodity, that is crude, has come down sharply from 130 to now I think around $85 odd on the Brent side. So that even that kind of a backdrop, the stock has actually underperformed. It's trading below the 200 moving average, the 50 DMAs as well. I think that the stock keeps on fluctuating at those levels. So which means that it's an underperforming stock. Now, ideally, in a case of an underperforming stock, you have to wait patiently for a breakout to happen. Because if you try and buy it in the middle of the price trend of a consolidation or into a bear trend, you would be left out waiting for the stock for a much more longer time. So their patience would be tested significantly. So it's always better to try and buy these stocks on a breakout. Let the stock confirm a breakout above the 200-day moving average. That could be maybe another 5% or 7% higher from current levels. But then your timing could be a bit more precise rather than buying at current levels.
Okay, next one is coming in from Mayank Saraf, and it's a long-term view that he's asking for Shahina. He's saying that he's holding 500 shares of Bajaj Holdings and above 1,000 shares of Goodyear. He wants to know whether he should continue to hold on to them for the next 5 years. Do you think that these counters make sense for a long-term holding period?
In fact, Bajaj Holdings is doing pretty well in the last, couple of days, seeing new highs. So I would continue holding both the stocks for the medium to longer term.
Continue holding both the stocks, but the next query coming in from Srinivas in Shahina. He wants to know the take on Electra Green Tech. He's holding 100 shares at a price of 510, and on a YTD basis, we have seen the stock drifting lower by 40%. What's the view coming in? Should he hold on or book some losses out there?
I'm sorry, I don't track the stock.
Okay. Kunal, would you be able to help him on technical front?
Again, I don't track the stocks, so won't be able to comment.
Okay.
All right, let me go on with the next query then. This one is coming from Manjuna. Tata Motors, 300 shares at an average price of 340 rupees. Bought it over 10 years ago, in fact more than 10 years ago. So I'll request my producer to fire the line graph of Tata Motors for a 10-year period at least, or at least 12-year period if possible. He wants to know whether he can add some more at current price or look to book profits. He's saying he wants to know also the prospects of the company. He's saying he can hold on for the next 2 years. What's your take on this one, Shahina? He's already holding the stock for a very long period, and if you look at the stock price return also, over the last 10 years, the stock has definitely given a 78% uptick, but then his buy price is 340 rupees per share. What do you think? What should he do? Book profits or stay put with Tata Motors?
I think he can stay put with Tata Motors, though it is not my top pick in the four-wheeler. I would prefer Ashok Leyland. But Tata Motors, he can continue to hold. If he wants to keep a stop loss, he can keep a deep stop loss close to about 380 and continue to hold for the longer term. I think he can see a decent return even from here going forward for the medium to longer term.
Okay, but with this, viewers, we are starting our rapid fire session. So let me take the first query, and that's coming from Bhaskara. Kunal, he wants to enter into Motherson Sumi wiring. Will that be a good bet to enter at these levels?
Well, you can look to enter at current levels of 60. I think the stock is heading towards a breakout of a 50-day moving average. You can look to buy.
Okay, Satya wants to know about PNB for the short term technical view. When can he buy next?
I think closer to 47.5 or 48 could be a level where you can look to start entering PNB.
Okay, Ravi Teja has a query on HPCL, 100 shares at a price of 324, sitting at a loss of 17%. Shahina, what's the take?
I think he can look to exit it at any bounce. I would look at something close to about 240, but my medium term is exit.
Okay, Santi wants to know about Clean Science. Shahina, 25 shares at the price of 1,590 rupees per share. He is accumulating in this particular downtick, but do you think it makes sense to do so? And what levels can you look to accumulate?
I would avoid accumulating at current levels. Please wait for some deeper corrections to add.
Okay, Kunal Bharadwaj has a question on Dabur at an average price of 549. He has entered into 30 shares. What's the view?
Hold on.
Okay, Madhuri is saying she missed the auto and the banking rally, but now wants to make some good profits. Two medium-term stock with a good upside momentum. What's your take on this, Kunal?
I would look at Tata Motors as a good bet from the auto pack, Hero MotoCorp, something which I've recommended earlier, and from the banking pack, you can look at the PSU names, something like Union Bank on dips as well as Bank of Baroda.
Okay, Sampath has a query on Dishman Carbogen. Shahina, he is holding 100 shares at a price of 212, almost a 50% loss for him. Average out or book losses?
I think he would do better to exit.
Okay, Humaira Sheikh has Adani Power holding 42 shares at a price of 333 rupees per share. Kunal, what's your view on this one?
I would suggest to book profits over here.
Okay, Jay Krishnan has a query on Tata Investments, 91 shares at a price of 2,700. Kunal, any view there?
You can continue to hold on.
Alright, Manas is invested in Laurus Labs, 457 rupees per share is the buy price. Shahina, is there a fundamental issue or can he continue to accumulate this one?
I would suggest an exit. There are fundamental issues as well as technical.
Okay, viewers, that brings us to the end of the rapid fire session and to the end of this show. Buy now, sell now. And
no, actually, we will actually slip into a break. The show has not come to an end.
Okay.
No doubt, the query segment has definitely come to an end. Thank you so much, Shahina, as well as Kunal, for joining us on the show and taking our views through all the queries, as well as talking about the FMCG pack. But for now, viewers, we will slip into a break. But when we come back, we will have a management joining us, so don't go anywhere.
company, we have access to capital, we have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's talk about a company that is looking to list on the bourses, and the IPO has opened today. That is Uniparts India, and for now we have Mr. Gurdeep Soni, who's the Chairman and Managing Director at Uniparts India, joining us on the show. Very good morning to you, Mr. Soni. Thank you so much for joining us on ET Now. If you could talk to us, what are your expansion plans post the IPO for Uniparts, since the proceeds from the offer will go entirely to selling the selling shareholders?
Correct. So the Uniparts India IPO that is opening today is a complete OFS offer for sale. There is no fresh money coming into the company. The offer for sale is primarily because private equity investors are exiting completely from the company. And there's about 9% that the promoters are also taking to make it a sizable issue. The company per se is like I said, a very strong financial position. In fact, last year it had a top line of 1,227 crores, a bit of 271 crores, which is 22%, and profit after tax of 167 crores, which is almost 14%. But clearly, the ROCE, which is 31%, and ROE is 26.8%. And in fact, in the last 3 years and 3 months, the company has generated 424 crores of free cash. Debt, which about 4 years ago was 250 crores, is, as we speak, is below 60 crores. So the company is, in fact, in a very strong position, and therefore the company is not seeking any fresh money at all.
Okay, good morning, Mr. Soni. This is Shrishti joining in. So, if we see your business, there are two geopolitical strategies that would have impacted your business greatly. One is China plus one strategy, and the other is US passing the $1 trillion bill on infrastructure. Tell us about how you have benefit from them, and going forward, what is the kind of growth that you are penciling in on account of these strategies?
Spot on. Actually, both the strategies are working extremely well for us. Let me start with the infrastructure bill. $1 trillion is what the US has committed to spend starting immediately and until the next 4 to 5 years. In fact, out of that, 600 billion is going to be for things like the internet and railways, etc. But 400 billion plus, the spend is on roads, ports, and pure infrastructure. In fact, even the oil and gas industry, which is doing extremely well in the US, is spending a lot of money on infrastructure. So, and the biggest customer in the world that I have, which is also the largest company in the world, in fact, recently has said that they themselves are projecting a growth of 13 to 15% next year, and that in the peak of the construction industry is going to be in 2026. So clearly, the next 3 to 4 years is extremely well for this reason. Secondly, and because my, out of the top 10 customers in the construction machinery, 5 are my customers. I'm talking about the top 10 in the world. Clearly, this has a great implication on our growth, and is very, very positive for Uniparks India Limited. Second thing you talked about is China plus one. Clearly, a big reality. In fact, the process started about, I would say, a little over 4 years ago, when the USA imposed a 25% import duty on China. And the companies that we do business with realized that India was now more viable from buying product from India. But, the 2 years of COVID kind of put things on the back burner. But post that, we are seeing an extreme amount of additional business coming our way because of the China plus one policy. In fact, the US administration has talked about what is a word called friendshoring. They actually want to buy from countries that are friendly to the USA, and clearly India is going to be a great beneficiary. And because Uniparts has been in this business for so long.
Right. Mr. Soni, if you could tell us, what are the EDI projections actually saying about the demand? Also, if you could tell us, what is your outlook for the coming year?
It's kind of a forward-looking statement, but we are definitely looking at a very healthy growth moving forward. Just to give you an idea, in the last 6 years, of course, we have grown at a top line of 12.1% CAGR. But EBITDA has grown 30% CAGR in the last 6 years, and profit after tax, which is the biggest number, has grown 40% CAGR in the last 6 years. We are still looking at a very healthy growth. The industry growth is projected to be about 7 to 8%. But the China plus one, the infrastructure bill, and I may like to add one more thing over here is, because of the war with the Ukraine and Russia war, which started in February, March, almost 20 million tons of grain, exportable grain surplus went out of the markets that was to come from Ukraine, and another 20 million from Russia because of embargoes. So 40 million tons of grain shortage. In fact, even the Indian farmers started exporting, but the Indian government put a ban on exports rightfully so, because it would have led to high inflation in India.
All right, Mr. Soni, we leave it there. Thank you so much for joining us on the show to talk about the IPO that you're coming out with, which actually opens today, and where you see the company headed from here on. But with that, we're totally out of time on this edition of Buy Now Sell Now. Now is the time when the show comes to an end, Shrishti. But it's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at Noon coming up next.
You're right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
पेश करते हैं गोल्ड लोन मेला। गोल्ड लोन लेने पर पाए सुनहरा मौका कपल्स के लिए फॉरेन ट्रिप जीतने का और साथ में जीते कई आकर्षक इनाम। यही नहीं, हर ट्रांजैक्शन पर होगा 24 कैरेट गोल्ड आपके नाम। अपने फ्रेंड्स और फैमिली को रेफर करने पर भी मिलेगा खरा सोना। गोल्ड लोन लेने के लिए आज ही मुथूट फाइनेंस की ब्रांच में आए या फिर घर बैठे बैठे गोल्ड लोन पाए। आज ही कॉल करें 1800-313-1212।
Muted session on the Wall Street, even as Nifty holds near life highs. Metals, real estate stocks lend major support. Broader markets outperform today.
India continues to stand out as a bright star. That's the word coming in from Morgan Stanley's Ridham Desai. He adds that the market has a long way to go before we peak and sees more scope for upside in their 20% earnings growth estimates. They remain overweight on financials and discretionary.
Upbeat high-frequency indicators could aid GDP growth in the second quarter. ET Now poll suggests the print will come in at 6.2% later today at 5:30 p.m., just under RBI's own estimate of 6.3%.
After Revenue Secretary Tarun Bajaj told exclusively to ET Now that the government will back for a simplification of capital gains regime, more sources tell your channel that the budget may look at reclassifying assets like gold under this regime. This would lead to lower holding period from 36 to 24 months.
Adani Group backs India's largest redevelopment project. The Dharavi slums will be redeveloped by the Gautam Adani-led group for a whopping 5,096 crore rupees. Around 240 acres of prime property in central Mumbai will be transformed to house 60,000 families for free.
Gland Pharma under pressure after its announces acquisition of Cenexi Group. The management also clarified that they are not aware of promoter stake sale. Brokerages remain mixed on how the deal will pan out for Gland Pharma. Hello, good afternoon, and you've tuned into ET Now, and this is Markets at Noon with me, Cheryl D'Souza. Along with me, I have Anisha Jain. A very good afternoon to you, Anisha. And
are you going to talk about record highs again?
I thought of it, then I thought, chalo, I'll change the lead in a bit and say muted moves on the market. No doubt, intraday basis, we've hit the record high levels once again. But like you mentioned yesterday, the sector rotation is at play, isn't it?
Yeah, again, today it's the realty space which is actually doing well. So, Oberoi Realty is up 3.5%, Prestige, Godrej Properties, they're all excited. Not sure if it's the redevelopment project that has spurred the rally across the real estate names, but definitely quite excited. Metals are also having a great day. So, if you look at Hindalco, that's one of your top index gainers. You also have JSPL, Jindal Steel, etc., which are doing quite well. Autos are in the front foot today, so Bajaj Auto is up 1.5%. So it's the banking stocks which are under pressure today. So the banking index is down 3.3%, and the PSU banking space is also coming under a bit of pressure. Though having said that, the broader markets are not doing too badly. They are maintaining to hold on to gains, and if you look at the advance decline ratio, it's favoring the advances as we speak. But time now to welcome on board Ms. Shilpa Rao, the derivatives lead analyst at Prabhudas Leader. Shilpa, hi, good afternoon. Thank you so much for making time and speaking with us. First up, about the market texture itself. Yes, we have been hitting fresh highs, but it's not coming with a lot of volume. There is that enthusiasm which is lacking in the market. Going forward, do you expect us to consolidate between 18,600 to